Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 1st of November. All right, a little bit earlier than usual, but let's just wolf into it. There's a few things sort of going on now. After the Fed, we are starting to see, like, the markets are coming down, and we are starting to see a little bit of movement, especially on the hourly chart. So just having a look here down the line, the dollar index sort of cruising lower. It hasn't really got the full momentum yet, but it is moving south. Dollar yen is the big mover. It's down about 100 points. I think that's more to do with Trump's impeachment proceedings moving to phase 2. Bit of a safe haven trade there. Dollar CAD still sitting up there after the Bank of Canada and Fed. Dollar Swiss is drifting lower. Now Euro, right? It's sort of just had enough momentum to go up above 111, sort of 55, 60. A little bit of a stop loss run, but it's really got zero momentum, as has sterling on the hourlies. Really noticeable that these two pairs, obviously the Brexit stalemate is causing a bit of confusion, but there's no clear indication of where euro and sterling are going at the moment. We're at the bottom. The Antipodeans, the Aussie and the Kiwi, moving up on the hourlies. Aussie's sort of breaking higher on the dailies. Is it going to go? Is it not? Well, it's hard to say. We do have the RBA next Tuesday. That'll clear things up. But of course, today, we've got a bunch of data coming out, most notably the US non-farm payrolls. Now, this is more of a head kicker than a tradable number, right? It can give us clear direction, but for those traders who aren't used to say the non-farm payrolls, if I just scroll down here, you look at the payrolls data, right? There's about 6 or more variables coming out all at once, right? Now, yeah, sure, in the days gone by, you just focus on the non-farm payroll number, but the markets are more dynamic now. They are looking at average earnings. You've got the, if I scroll down a touch further, you'll see you've got the participation rate, the unemployment rate, and then everything else as well. So it's not such an easy thing to just jump on and sort of bang around. Keep an eye on the Chinese manufacturing numbers today. Obviously, could be a big impact for the Aussie and Kiwi. Swiss CPI. Now, any CPI is important, but, Swiss, I mean, the economic numbers there are hardly variable. So I'm not expecting anything, but it's always there just because of CPI. UK manufacturing, I don't expect much out of that. And then you've come down to the main play, which is the non-farm payrolls, followed by the ISM manufacturing PMI afterwards. Right, that's where your sort of focus is going to be. Now, when you look at the charts, and this will make a bit more sense to the analysis I was just showing you there before. We've got, you can see here the Aussies popped higher. Okay, really not going on with it. Same as the Kiwi. There was a downplay or a revision by some of the local banks down in New Zealand about the potential rate cut in New Zealand next month. That's been put back to next year. So we're seeing a little bit of they want to go higher. Aussie and Kiwi want to go higher, but they're still under pressure economically and by their central bank. That's why they're not running. Here's that sort of sharp move down on dollar yen. And once again, well, sterling's just trading sideways with the Brexit news. It's in its own world, right? So don't worry about it. But euro, you know what? I still think it goes down, but this price action tells me that traders are not convinced either way. No one's really willing to put any solid bets on. And dollar CAD, well, it's now just trying to find a home up here around 130, 160 with no sort of technical levels at this point. It's just drifting, okay? Bank of Canada, reduced growth forecasts. Then we've had the Fed sort of saying they're not going to be cutting anything soon. So that's why it's just holding up here. And as well, working with that is that move in oil, right back to $54. So it's a bit of a tricky one. So really, to me, the best pair is still, trading Trump's impeachment or the safe haven trade there is a tricky one. Aussie and Kiwi just sitting up here is not really exactly helpful. Euro, well, it's just sitting here just jamming around that trend line. So what we have is the non-farm payroll should give us hopefully clear direction on the US dollar and clear all these grey areas up, okay? Especially Aussie, Kiwi, and Euro. They're the pairs that sort of make the most sense. Like dollar CAD sort of does, but it's in the middle of nowhere, right? At least we've got something to work with some vague trend lines on Aussie, Kiwi, and Euro, and they're the pairs I'll be focusing on as we move into this data. And that's pretty much it, guys. If I give you just a quick look at the news, there's plenty coming up. I mean, you can be sure as hell the news services will latch on to anything to do with Donald. He's trying to be positive about a potential deal between China and the US. That would be a great thing. And then obviously this impeachment is hitting a number of different pages, front page of many headlines, or various things. And that's pretty much it, guys. There's not much else we can do. I feel a bit more comfortable now that the Fed's out of the way with the currencies, but the non-farm payrolls will come at a good time, give us that final piece of direction as we move into trading for next week. All right, guys, have a good trade day. Cheerio.